Alright, welcome everyone. This is Tyler, part of the Team Let's Eat group, owner of WolversofWallstreetFX trading group, bringing you another weekly analysis for the week of April 10 through the 16th. We got a couple pairs to go over today. We have two crypto pairs, ETH and Bitcoin, and then of course we have gold and the pound yen. So let's actually start with gold and go from there. So on the weekly time frame, you can see price spiked this low out and rejected and closed all the way up here above these two opens, and then this past week it just pulled down very slightly to 1915 and ended up closing almost at 1950, right? So let's zoom in to the daily. And as you can see here, I marked this area right here because this is where I see a lot of the liquidity being grabbed. If you take notice, a lot of the bodies of the candles are up above this area, and all the wicks end up right in this, between these levels of like 1915 to 1920 essentially. So what we saw the past 2 weeks really is, first we had a huge liquidity spike all the way down here, spiked this low out, and then we pushed immediately back up, and then we pushed all the way to 1950, almost very close to 1950, and then we came back down and we held this level pretty well. We made a 1 2 3 spike down. We had the fourth day did not breach that low, and then the fifth day did not breach that low, and from there we saw price slowly push up and clear these highs. So going forward, what I'm expecting is this bullish pressure to continue as we reach our major swing targets up here of like 2100. So going forward, what I'm doing is I'm holding this position. I'm holding the position we got down in here, and I'm looking for another position to enter as this new week candle opens up. I would really love to see a wick push down at least to 1931, which, as you can see, that's the open of this daily candle, but possibly a little bit lower. If I go to the weekly, that would just generate a nice wick down into this low of this past week, and then hopefully we can close, up in the 2000 or very high 1900s. Similar to like right here, for example, we can see a huge liquidity spike, and then the following week kind of didn't really do much, and then the next week when it was really about to take off, we can see price push down to the open of this candle in between the low, and then it pushed up here. So not in that exact sense, but in the same sort of flow of what I'm expecting market to do, is just pull back slightly, because what the banks are going to do this week is, actually let me go down to the maybe 2 hour, no, we'll do 4 hour for this example. Looking at the 4 hour, I want to pay attention to this price action right here. As you can see, we dipped into this low one more time, and then we pulled back, or we pushed up, and then we pulled back into this area, and that is where we pushed off from, and then we pulled back again into this area right here. So just for the sake of that example, I'm going to mark these two lows, and to me these two areas are where lots of buy orders were placed, and it would make sense, being an institution, to now that it's a new week, bring price back down to that area one last time and get one more set of buy entries at this price point before making a huge push up and breaking these highs and pulling into these highs. So that is my plan. I bring it to the daily levels, right? So I guess I'll just keep that like that. Right there, that looks good. So I'm really more interested in entering right above here, right around 1930. It doesn't necessarily have to come down to 1920 or possibly even lower. But I'm just gonna wait and see what happens. We already have a couple entries, so it's not necessary to enter again, but that's what I'm expecting going forward is some sort of pullback down into this area or somewhere in between here to give us one more solid entry before it takes off to the moon, essentially. So if I zoom out, you can see how beautifully that's looking. All right, we got a really nice squeeze of price right here. Then we popped out, so it would be brilliant because it's a new week to see that pull back one last time, creating that wick on the new weekly candle, and then seeing this thing explode, which obviously gold has the ability to pull back and then snap back up pretty easily. I mean, even in these smaller examples here, you can see how it dropped 120 pips, right? Right here, if we count the peak and pull back, that's 260 pips. So 260 pips, I mean, that's lining up pretty well. And then obviously you have the larger examples. Even right here, for instance, we could see this is the top and we pulled back one last time before taking off. If we measure that, 300 pips, right? So I'm staying patient with this one. I would really like to enter right in the middle or the lower half of between these two areas. So I'm going to be really paying attention to price once it gets pretty much breaks under this low right here. So let's look at that in the 2 hour. You can see how that's very clear right here, this low. So I would love to take an entry under this level. It doesn't necessarily have to be right at the bottom because we already have 3 entries. But I would love to see price push down, and then if once it starts rejecting, we take that entry and we know it's going to blast off. Whether that happens on the next daily candle or not, I don't think it would happen in one candle. I think it would be like a 1, 2, 3, and on the third we get the entry, and then 4 or 5 are a huge explosion. But it could be just one. If we take a look right here, look at this candle. We're pushing up, and look how big this candle is. This is 350 pips in one candle, and then immediately back up. So you never know. I'm just going to stay patient and see if we can get an entry essentially under this daily low. That would be a sniper entry for gold. And that's pretty much it for gold. We've gone over essentially the same thing the past few weeks now because, I mean, the initial entry right here that's going to be 3 weeks ago now. Right, this is 10 candles, 10 days. Alright, so that was it for gold. Now let's take a look at the pound yen. So in very simple terms, you can see we're on the daily time frame, and I've marked these daily highs right here. And as we can see, we have been rejecting and stalling around these highs. So let's zoom in a little bit and really look at and pay attention to what's going on here. So we have this candle right here that showed the initial rejection. Okay, it pushed up and it rejected back down, and it broke these highs right here, which is kind of like a head and shoulders sort of a pattern that we see a lot. Broke that a little bit, but it showed a lot of rejection. Come to the next day, small wick, we push up to these highs and push all the way back down, showing again lots of rejection. Now this candle, because of the way it closed, you can tell when it opened it dropped down here, so continuing this bearish pressure, and the bulls decided nope, not yet, so he pulled it all the way up to here and then rejected it a little bit more. So we're seeing that pressure step in one more time. And then Friday last week, we can see price pulled all the way up here to 162.3, stopping out every single high that we've seen so far. And then it dropped lower than this candle's open. But because of how we know how manipulation works and because of the week. They didn't want to push price down this week. They're waiting for, or they didn't want to push price down last week, so they're waiting for this week. So with that being said, we already have an entry pretty much right around where price is at right now. I think I have an entry at 162.2 as well, and I'm essentially just looking for price to um, not move much higher. I don't think if price is going to completely drain, I don't think we're going to see too much of a wick on this weekly candle. I think we spent a lot of time accumulating right here, which we'll break down in just a minute. But we spent a lot of time here. I mean, how many days? This is 3 days of just straight sideways and pushing up and pushing down and then breaking structure, right, and then pulling back up again and then pushing down. I mean, it's been pretty choppy, pretty sideways, but from what we see on the higher time frame, we're expecting that move to the downside. And this is the target down here. This is where lots of liquidity is. So even if this is going to have a major, you know, uh, bullish run and continue, I am expecting a sort of pullback. And let's dive into the 2 hour. So what interests me about this is normally I mark up wicks, right? And that is where all the liquidity is. But as we can see here, even on the 2 hour, we had some massive wicks. So a little bit larger than what I normally do. But as you can see, sorry, I have the hiccups. Um, this whole area right here is pure liquidity, and it's about 100 pip range. And as we can see, price pulled up into that area of wicks, and we got over halfway. And looking at the 2 hour now, we can see the structure a little better. So we pushed up, we got the 1, 2, 3. We kind of broke this structure right here, but then they faked everyone out, and we held the support. But if we take a look, I'm gonna delete this now. If we take a look at the candles and the behavior of the candles, we can see that every time price pushes up into these highs, it immediately gets rejected. And in the way it's getting rejected, how we get in the 1, 2, 3, how the structure breaks momentarily, how we get massive wicks to the upside, and how we stopped out all of these highs right here and then completely drained, and then all these wicks and all these bearish pressure. It's really showing like it wants to go down. But as you can see, it has been fairly sideways. I mean, it's basically the same price today as it was 3 days ago. Is that 3 days, or is that, I wonder if that's 3 trading days, because that would be like 5 days ago. Well, I guess it wouldn't matter essentially, but um, you guys get the point. So it looks choppy. It's probably confusing some people, but just based off of how we're reading the price action and the reaction that it's getting as it's in this huge area of liquidity, we're looking for the sells. So yeah, I guess we're already in sells, but going forward this week, zooming in 30-minute time frame, look at how crazy this looks. So essentially, I'm just looking for an entry above this high. Okay, if it doesn't do that, I would be very surprised because that's like 20 pips away. But what I'm expecting is price to stay within. I could just go with this, right? Somewhere in here, I want to see price pull somewhere right into this area. I'm gonna go with that. Okay, that's the liquidity. Does that look a little bit better now? Let me go to the. Oh, we are on a 30-minute. The hourly. Just pay attention to what happens when price pulls into this zone. Huge rejection. Huge rejection. I could actually extend that a little bit more. And you can see every time it pushes in, it's just grabbing orders. That's all it's doing here. It looks really choppy to like an untrained or a newer eye, but I tell you right now, this is just grabbing orders. Every time it comes in here, it's grabbing more and more orders. Um, so yeah, that's pretty much it for the pound yen. I'm just looking for another entry within this area. If we break this, um, I'm gonna give it the chance to just be spiking that high out and stopping out everyone whose stop loss is above here. But I don't think we will. But again, I always want to be prepared for that. So there is a chance that this does break this. That's it for the pound yen. And the last two I have are cryptos. So we have Bitcoin and Ethereum, and it's pretty much just Bitcoin that we're trading, and Ethereum is just like like when you press enter on one, you just press enter on the other, sort of a deal. But I'll show you the chart because it's very similar. So 2 weeks ago, we spiked out this high right here. This past week, we got some really nice sell entries as it made that wick. We got an entry, as I marked this high right here, and we got an entry right there, and a second entry right there. Unfortunately, the take profit was down in this area, so the take profit was hit because I really did think, based off of the weekly, that I thought this weekly candle would spike out this one. However, we did take some trades and they were profitable, so we can't be too mad at that. And there's going to be some more opportunities coming soon. Like right now, we already took a sell right off the top of this area. We got two entries, two sell entries. That's better on the 1 hour. As you can see right here, 43.9 was my sell limit. That was tapped overnight. It drained. It came back up the following morning, and I did not have a second sell limit, so I actually just manually placed another sell as it tapped this area, and as we can see, it dropped, and I actually closed the second entry when it was down here because we were in this area with a lot of buy orders. So that is why I decided to close half of the trade right here. Going forward, I believe we're going to see this sell pressure continue. If we look at the daily, I want to show you something. It's a pretty cool trick that we have on TradingView here. Let me delete this. So take your eyes into this little congestion area right here. Okay? I'm going to just highlight this. And then what you can do in TradingView is you can press Control or Alt I, and it actually inverts the chart. So it's literally just going to flip, right? I'm going to do it now. So just flip the chart, okay? You can even look at the side. You can see the lower prices on the top, the higher prices on the bottom. The candles are still exactly the same. See, normally my bullish candles are bright blue, so it literally just flipped the chart on its axis. Now let's take a look at this price action very carefully here. Price push down, huge push down. I mean, we're talking, or push up, but whatever. You get what I'm talking about. I'm just going to say push down. It pushed down, and then it stalled, and for 1 day, and then that second day it tapped out that high. See, price pulled higher than that high, and then it pushed down here, right? Then it maybe stalled for a little bit, and then as you can see, if we marked, I'll just mark this low right here, and if we dove in and found another area of liquidity, probably around the midpoint of this wick, we could mark that level, and what we could expect is a pullback into that area of liquidity that we marked, and a continuation down, because when crypto moves, it just goes. Like, there's nothing stopping. It's not just going to reverse for no reason, and if it is going to reverse, it's going to accumulate like it did the past few weeks when we were taking a whole bunch of entries. But you understand this sort of pattern and flow of the market that I'm showing you here. I'm going to bring the chart back to normal. And as you can see, we have a push down, we have a stall, then the second candle stopped that high out, and now we're kind of pulling back in here. So as you can probably already imagine, that's kind of what I'm looking for, is tomorrow's daily candle, which starts in 3 hours, we'll get a new daily candle. I'm expecting its wick to come up into this area right here, and then I believe we're going to continue down into the 40K region, which is down actually right where the example just was. So down to these lows. Honestly, probably take out the lowest low right there. So I'm expecting a further push down into 40K, which is about 400 pips. So pretty decent trade here. Let's take a look at this in the 4 hour. What do we see? We see price already starting to throw rejections, maybe tricking some people into selling from right here. But we know it's going to come. Whoops. Oh, crap. We know that price is at least going to come higher than that open right there. As you can see, it touched it, but it's going to come higher. And what I'm liking is that this daily candle, just a minute ago, it was pushing and it was a huge bullish candle. And now it's turning back around and it's actually throwing us a nice wick. So that's another good sign that we're seeing the rejection step in already. But tomorrow's candle is definitely going to come up higher than this high, which is also higher than that open, right? So everything's lining up really well. So let's dive in the 2 hour. So the 2 hour is a very good tool to use to find exact areas where price is rejecting. Specifically, I've noticed with Bitcoin and gold, it works very, very well. Um, so right off the bat, I see this area right here, right? This whole area is intriguing to me, specifically this level of 43.6 thousand, because that is, where the candles close right there. But let's dive in. We're going to break it down to 30-minute time frame now. We're actually going to go all the way to 10-minute, okay? So now what we're doing is we're looking at the last moment price pushed out between these two levels. I'm looking at, okay, where was liquidity injected? And if we take a look, obviously, yes, up here, but we're not going to tap that high. But if we look, price pushed down here, this was the last area where liquidity was injected. How do we tell that? Because price pushed down, right? It took out this level right here, started flying down, and then it stalled. And then it stalled, and then it stalled, right? We can see some liquidity was injected right here. Then it stalled, and then if you take a look, this 10-minute candle, it made a wick. So at some point, it was pushed down all the way down here, and then it pushed all the way back up. And this was the last area of where liquidity was injected. So this is actually this whole area is where I want to take a entry at, and that is this doji candle right here. So you see how we just zoomed in on that doji candle and broke down like where and what was happening. Huge rejection already. Look at that. I would be very surprised if price did not pull up in here after the new daily candle opens. But yeah, for Bitcoin, that's pretty much the plan. Is just waiting for price to pull into 43.7 ish, and then looking to take yet another entry on the trade. And I also want to anchor the VWAP. I'm going to anchor it right when we started accumulating, and as we can see here, a pull into this area lines up very well with tapping out the VWAP, so that's a good confluence. So yeah, that's what I'm expecting on Bitcoin, is just a slight pullback into this area before we take more sells with the target of 40,000. And with that, the last thing we're looking at for the day is just to match that with Ethereum. As you can see, I'm already zoomed in. I don't need to break it down like I just did with Bitcoin. This is where I'm looking to take that entry. But you know what? I will break it down a little bit. I don't know why I don't know why that VWAP was there. Must have been old. So look at this look at this 4-hour time frame. These wicks right here. That's what I'm interested in. Okay, I'm also aware of this level right here. However, I do think Bitcoin is going to push up a little bit more, and that would help drive Ethereum up a little bit more. And if that happens, then this area is, the next area that we're going to see pressure from, and that would also lead to stopping out that high, kind of like how we stop out all the highs here. So with Ethereum, I honestly, when I enter Ethereum, it's pretty much just like whenever I enter Bitcoin, I just pull up the Ethereum chart and then make sure it's lining up well, and then I'll just enter Ethereum right there, because they pretty much tip over at the exact same point at the same time. It might be a little bit different, which is why I don't just immediately enter Ethereum. I'll go to the chart and I'll look. I'll make sure it makes sense. Um, but one thing I want to point out is, actually, we'll go back to Bitcoin for this. So this is the target for Bitcoin. If we mark this low, we can see where price is already at right now. That's 1,400 pips to the full target. And if we take a look at Ethereum, that is 1,600 pips to the full target. So Ethereum's actually throwing out more pips right now on this same move, which is really interesting to know. But if you put your eyes right here, see this? How it pushed down, and then we just had like a little scramble right here. And then you can see the highest point was higher than the other ones. That's what I'm expecting here, right? We push down, having a little scramble. I'm expecting some sort of spike into this area that we just looked at. And then another huge push down, possibly into this area like 2,800, 20, probably right here, probably around 2,800 before we get another, sort of pullback and then another continuation. What I really like to see is something like this. I believe this is 4 weeks of just straight downside movement, because if we take a line and we put it to the top and then we draw it all the way to the bottom and then we just move that over here, we can see a push down from this high to down here is actually smaller than what it did here, which is very possible. But the point is that it's not impossible. I mean, a lot of people I know right now that a lot of them that say this don't trade forex, but they're like, oh, Bitcoin, oh, crypto's about to explode. I'm like, bro, it's about to drain. Crypto's about to crash. It already has been. There's nothing bullish. There's nothing bullish about this, right? Nothing bullish about this. Bitcoin chart, look at it, looks exactly like Ethereum, right? Same thing, right? See, this is the same exact movement just on the Bitcoin chart. See how it stumbled? It dropped. It didn't even pull back. It just stumbled around for a minute, and then it dropped, and then this was a pullback. That's a heavy pullback, which is what I'm expecting down in this area right here, like minimum 40,000. It depends how big of a push we get down, because if we measure this one at the peak to its low, I mean that is a huge look at that. I mean, yeah, we could be from this point we could be dropping all the way into like mid 30s. It's very possible. I'm actually going to mark this daily low right here, because you can see how none of these, they weren't lower than the other one, right? So this is the lowest one. So that's actually going to be my target. So we just added we just added another 300 pips to the target before we end up closing anything. So yeah, it's possible that we get a few intraday scalps in here. So if I just zoom into the 10-minute, that's probably too much. Okay, yeah. I'm gonna scroll back in time. Scroll back in time. Way back in time. Okay, okay. This is that example how on the 4 hour. Remember, this was like a huge, right? So this is that first scramble. As you can see, let me just zoom in. Okay, you can see this is a decent amount of, I mean, sell, buy, sell. I remember taking these trades actually. We sold right here, we sold right here, and then we sold right there. I remember this very specifically. Um, but as you can see, there's multiple intraday opportunities. Overall, every sell position, I'm looking to probably hold everything. But if we do get a possible buy opportunity, then just enter the buy because you can have a sell open and a buy open at the same time. So yeah, that's pretty much what I'm looking for. I am open to the idea of price tapping out this high, but just based on what's happened, it's not really necessary because what happened here is see how price pushed down and then this didn't tap that high out, but this one did. We got that already. We got the tap out already, and there's tremendous sell pressure here. I mean, people thought it was selling here, people thought it was selling here, and then it exploded. I mean, this accumulation was massive, massive accumulation, and the amount of sell pressure we have is massive. So it really doesn't need to pull back that much. Just getting back to my example here, right? So that's all I got. That's all I got this week. Should be a pretty good week. Market just opened. Let's go.